Good morning, everyone. Here we are, one more week. Marlene Gonzalez with Canvas Real Estate. And I think this is one of my favorite classes. Ask our lender, First Origin Mortgage Lenders, your questions about financing. So, of course, we have Mr. Austin Palacios in the house. And we also have the honor of Ray Palacio, the founder and owner of First Origin Mortgage Lenders. So, Austin, and before the agents start asking questions, would you like to give us a snapshot of what the month has been like and what may be projections between you and Ray with the market?
Yeah, absolutely. All right, so I mean, we had the rate cut in the middle of September. The rates got super low for a good like 2, 3 weeks. We have seen a little bit of a tick upwards in the rates. They're not as low as they were before, but we're still in the fives on many of our products. So we're still highly, highly competitive and way under those banks. Um, a lot of programs that we see coming in right now are a lot of condos and a lot of foreign nationals that I've seen personally. And those are fairly easy to do because number one, we're the best with condos. We are the best there is because if we don't know off the top of our head, we have condo representatives and we have Fannie Mae representatives, and we will find out for you beforehand, before you put that offer, before you do anything, how those condos are looking, right? When it comes to the foreign nationals, we have the easiest process. Those are usually probably one of the easier loans to close. All we need is really the only struggle we run into on those is like the accountants and stuff like that. They're a little slower sometimes in other countries, but that's basically it. So those are the two main things we're seeing so far. Oh, and DSCRs. A lot of people are doing DSCRs. Investment products. Those are key. DSCR is debt service coverage ratio, and it's basically an investment product where you put a down payment only. You don't need taxes. You don't need income. You just need a credit score and money in your bank account. And your rent to mortgage value needs to be 1 to 1. And actually, technically, we can actually go 0.8 to 1. So
Cool.
Yeah.
Very well. So, for somebody that wants to invest, okay, at what point do you tell that person it's better to refinance your primary, it's better to go DSCR, it's better to do another type of financing? What's the determining factor?
Yeah, so I mean, it really just depends on their situation because everybody's different, man. Like, we gotta go for their goals, right? So I always start off with our consultations. I ask, what are your goals? What are you looking for to get out of this, right? So then we start from there, and then we go. So let's say a given scenario, they have their primary property already. They don't have money, but they have a good rate and they want to buy an investment property. Okay,
Right.
cool. So if you have a great rate and you bought in COVID and you have a 2 point something, I'm gonna suggest, hey, let's do a HELOC and then let's go and do a DSCR loan after, because that way you don't have to use your taxes. This person is self-employed. He doesn't want to rearrange his taxes and pay Uncle Sam more. So he just goes ahead and does the DSCR loan at that point. And then it can vary, right? If this person maybe is a W-2 and doesn't really have to change their taxes, and he has a bad rate, and at that point, we'll do a cash out refi, right? Make sure he gets that lower payment while taking out equity, right? Because it only makes sense if the numbers make sense in those scenarios. So that's what we're really good at. We're good at playing out the scenarios and making sure it's keyed up for our clients.
Okay. Does anybody have any questions you'd like to ask? Or Ray, you want to weigh in what we were just covering before I go to my condo question?
No, I know that everybody was expecting the rates to be a little bit lower than they are right now in terms of the market, and the Fed did cut the Fed funds rate. Oh, I got a phone call in the middle there, but the Fed cut the Fed funds rate, and we were expecting a little bit more rate cuts, but I don't think they are going to be cutting in November and December, which is why the rates shot up a little drastically in the last few weeks. Pero everything else that Austin just said regarding the DSCR is a very successful product. A lot of people are taking advantage of it while it's still there. This is a product that may not be available in a year or two once these rates go back down and stuff like that. So definitely take advantage of it and, you know, and get these guys into more investment properties.
Okay, cool, cool. Well, I want to ask a question about condos, because you know, that's the stickler, right? And over the weekend, we reviewed a condo in Miramar that
Mhm.
we got sent the budget. And it was interesting because it was partially funded from pooled reserves. Can somebody tell me what that is first and foremost? And then we'll dive into why we cannot do financing on that type of condo and what the option would be.
Well, so the reserves are pooled in different cases by different condos, but this particular one has various projects apparently. I mean, I didn't even look at the physical aspects of the buildings, but from the budget itself, it looked like they have different phases, so different buildings in the project, and then they pool all of the reserves for each phase together, is what it is. But in the end, as long as it's over the 10% mark. And in that particular case, they would have had enough reserves because we were able to you know add back in stuff like cable and garbage and whatnot into the reserves to get them over that 10%. But that condo was unavailable inside the Fannie Mae system.
Hmm. Okay, I know you said it was unavailable, but for example, the condo association fee includes the cable, the water, and the trash. So since they're paying it as part of the condo association fee, are those the things you could factor back in to get that 10%?
Yes, yes. So those are some of the little things that we always in the back of our minds. If they don't have that 10%, we try to add back in. In some cases, it actually, in most cases, I would say 90% of the time, it doesn't add back into the 10%. But
Okay,
you know, because there'll be very minor fees that are actually being taken out, so it's not significant enough to get you to that 10%. But
right.
in this case, it was. It was because they actually in 2023 they did have enough reserves, well over 10%. But something happened where I guess they got more income, more fee income or something like that for 2024. I don't know if maybe another phase came into play, but it was, you know, $10,000 or something like that,
Mhm.
and more income, and they left the reserve the same. So that's why they dropped down into like 9 point something percent reserves.
Wow. Very shy of that 10% that we
Yeah.
need. Okay, but you had told me the other day that it's no longer an approved condo in the
Right.
Fannie Mae list due to critical repairs and or deferred maintenance. And it was
Yeah.
specific to this particular building, correct?
Right. Right. So this well the entire Miramar Club phase would be unavailable because and every single lender is going to have their own list of approved condos, and it's possibly because and we'll have our own as well, which is a condo list that we've given to you and your realtors. So if a Miramar Club at the beginning of the year with that budget was fine back in, let's say, February, March, and we did finance we financed a unit in there, so it'll be in our approved condo list. But it was made unavailable on July 26th by Fannie Mae. So when you call me, I actually go into the Fannie Mae system, which a lot of these loan officers don't have access to.
Hmm.
That's something for senior management to be able to look into it, or our you know our condo team or whatnot. But in our case, we have access to it. So I looked it up inside Fannie Mae system. It came back for critical repairs, and we weren't able to do it. Even though the other lenders telling you, oh yeah, they're on my list of approved and we're good, but it'll get to underwriting and then it'll get to their condo team, and as
And
soon
it'll
as it
get
does,
bottlenecked.
it'll get denied, unless they come up with new engineering plans or some way to rectify whatever was done in July. Somebody at some point in July submitted something from a bank or a lender to Fannie Mae, and Fannie had to actually switch it to unavailable, and that was in July of 24.
Wow. just recently.
Mhm.
And I found out something about that condo this morning.
Oh, okay.
They wanted to get a copy of the master insurance policy, and I'm gonna ask you in a second, why do they ask for that? And secondly, they wanted to know if the building had passed the 40-year recertification, and we got word that they had applied to pass the 25-year recertification, but it wasn't approved. So that's another
Right.
red flag, right?
Yeah, definitely.
Well, that's probably it. So back in July, they probably saw the denial of that 25-year recert, and then they start. That's when all of our condo teams ask questions as to why, and we have to submit the engineering plans and the recommendations, and if those recommendations are structural, forget it. Fannie will not. And not only Fannie, but is structural because we actually tried to do it non-QM with like a 20% down, even DSCR, bank statement, or whatnot. And none of the non-QM investors wanted to touch it.
Okay, so that means that the person has to come in with 25%, right?
Well, if it's on their unavailable list, not even with 25%, would we be able to do it?
Interesting,
Mhm.
interesting. So is that like across the board for most condos since we've had this situation, or only in a critical case like this?
I mean,
Yeah,
for
I mean, it
structural
was.
issues-
Go ahead.
Now, for structural issues, we run into that problem pretty often. We just ran into one in Jupiter that supposedly they're doing repairs, and it's like a couple $100,000 in repairs for the building. And not even for our non-warrantable products, which we do non-warrantable condos when it comes to budget and insurance.
Mhm.
We didn't want to touch it because the structural issue is something
It's
else,
critical,
man. Yeah,
it's critical.
Yeah.
The only
Yeah.
way you would go is probably like hard money, like last resort.
Oh, my goodness gracious,
Yeah.
okay.
Yeah, basically after the Surfside incident, the Surfside collapse, every building, I believe that was above 4 stories, had to. Sorry, I was getting a phone call there. As every building above 4 stories had to get an engineering plan, or an engineering inspection at least, and that for sure in Miami-Dade County. I think possibly for Broward as well. So if they did get an engineering plan, they had to have submitted it, from here in the last couple of years. So we know who has critical structural stuff already and who doesn't. It'll be very few that actually get on that list recently, and it's probably because they're coming up to either the 25-year or the 40-year of their existence.
Oh, boy, and we're in this boat because associations were not collecting enough for reserves.
Right.
And things deteriorate with time, so on and so forth, so here we are.
Yeah. I mean, it'll get better over time, man. I mean, these
Mhm.
guys are figuring it out little by little, and we've seen our condo list grow month per month. So it's little by little, it will get fixed over time.
So what's gonna happen come January 1st? When the
Well-
condos are required to be up to speed with reserves, so on and so forth.
Well, it's going to be good and bad. So after January 1st, 2025, they do have to have reserves for everything. And the reserves are detailed specifically for whatever it's going for. So they can't just have a reserve, a general reserve fund, because a lot of these condo associations were using that to back up their operating accounts if they were running short on money, and then they were draining the reserve fund for that. So it's good because if you're gonna do $10,000 for reserves for painting, it has to go to painting. If it's for 15,000 for elevator, it has to be for the elevator specifically. So it is going to be specific to whatever they're being reserved for. They are all going to have reserve studies prior to January 1st, 2025. And they have to follow that reserve study. So they are going to all have adequate reserves after January 1st. Now, the bad thing is there's going to be assessments. Condo fees are going up. And I'm sure you're seeing that these condo listings are growing, by the day. So there is more inventory on the condo side because more and more people are afraid to buy condos because they know all of these things are coming up.
Yeah. Yep, I'm in that boat too.
Yeah.
That the fees have more than doubled, and that's what's preventing us from selling our condo. Okay, okay, I want to go to good news. Does somebody have a question about a potential loan or something that we can do that is not affected by the condos?
Yo tengo una pregunta.
Yes.
Para los inversionistas extranjeros, ¿qué requisitos se necesitan?
Okay, so your question is for
Those are
the
easy.
foreign investors, what are the minimum requirements? Great question.
Exactly.
Give me good news,
Alright.
Austin.
Well, foreign investors are the easiest ones to do. Austin can take care of this one.
Yeah, so, solamente necesitamos 30% de pago inicial y
No,
una carta de contador. Si es
Yes.
self-employed, just saying like the income. And then if they are employed by somebody, we're just gonna do a VOE.
self-employed and doesn't need. How
No
much it is?
taxes, no nothing. It's
No,
just
no taxes, no nothing, yeah.
it'll just be they just need to be able to qualify for the
Okay, you want to do that in English
Perfect.
really quickly?
yeah. So 30% down, all you
Mhm.
need, and then if they're self-employed, CPA letter, and then if they are employed, all you need is a VOE, verification of employment.
Yeah, so that accountant letter from their country is gonna be on the accountant's letterhead, just basically saying, and it's, you know, whatever they want to write there, what they made in 2023 and year to date, and that's what we calculate as income.
Yeah.
I would say it's very important to do it's 30% down, plus they should have 12 months of reserves after that 30% down in closing costs. So that's going to be a key, because every investor is going to require 12 months of reserve.
Perfect, perfect, perfect. Okay. Any
And-
other
and-
questions from the group?
And one good news on the foreign nationals, those rates in some cases are even better than conventional loans. You know, because they're starting right now in the high sixes.
Wow,
Okay,
that's really good.
wait a minute, I gotta go back to the condo for a
Okay.
moment. No, seriously, if with the down payment of the buyer and seller contribution, is that allowed to do like a hard money of sorts? Or all the funds have to come from the buyer?
Bueno, the down payment should come from the buyer. However, you can get gifted, so you can get a gift from a family member for the entire down payment and closing costs of any deal, as long as it's primary and second home. On an investment property, they usually do not allow any gifts. But if it's a primary residence, they can, or a second home, even for a foreigner. So on a foreigner, we would put it as a second home if he's getting a gift, plus the reserves and all that stuff. He can get gifted everything, basically.
Okay, this is for a primary, but I guess my
Mhm.
question is, do they allow for the seller to do a contribution?
So if you are related, so if it is some kind of a relative, because I mean, you know, it depends. Is the seller going to give you 5% for, generally there is a gift of equity type of thing that the seller can give to a quote unquote relative. And the relative list is long. So if the seller wants to do something like that, but usually that gift of equity is a minimum of 20%.
Gift of equity. Okay, I'm just trying to be creative here to see if I could get this condo financed and sold. The big stick.
But if you are getting it for below, you know, with some equity, and he wants to say he's your uncle, you can do a 20% gift of equity and then just do an 80% loan.
Interesting. Gift of equity. I didn't know that you could do something like that.
Yeah,
Right,
it's a,
right, great.
it's a creative one. I have one going on right now. It's fun.
It is, huh? Okay, okay. Yala,
How long it lasts el clear to close?
how long does a,
Once the buyer gets the clear to close,
uh-huh,
how long it will be valid?
It should be to the end of the loan. I mean, unless the only way a clear to close is taken away is if a document expires and something has to hit underwriting again.
Yeah.
Those are kind of normal things, or maybe like an unexpected lien from title, like, I don't know, like,
Or they have to relock the rate, maybe?
yeah, because at that point you would have to hit underwriting, but, you know, like on Joel and I's deal that might close this Friday, we've had CDC on that thing for like a month and a half. Like it's been a while.
Oh,
So,
wow.
What
and
have you renewed?
the only thing I had to get back was a pay stub, because our bank statements were good.
Um,
Not
without-
the not the verification of employment, that doesn't
No,
expire?
it hasn't expired. So I mean, there are expiration dates on everything, and our system, it gives us a clear list of what expires on what day. But in his case, nothing has expired except for the pay stub. And so we just got a new pay stub, and then we got the CTC again within hours. So
Okay, I know he's had to extend that closing a
Yes.
number of times. Is it because of a seller issue or a buyer issue?
no, I mean, man, it's like a mixed bag because you know, the seller has like a lien on the property. And it has to do with some like I haven't seen the property myself, but it's some like techito, like in the backyard
Right.
that's not permitted, not
Mm.
permitted, and you
Same
know
issue here, the same.
the same.
Yes, it's not because of the grass, but it's because couple of like it's a violation that.
Yeah.
allowing us to close.
I had one that the back terrace was 40 feet linear and it wasn't done up to code.
Oh, wow.
And that was preventing us from closing, okay? And the city of Hialeah had already flagged it. It was accumulating daily fines, and our seller said, okay, don't worry about it. Take it off the market and I'll knock it down this weekend. And I say, no, you can't do that like that. You have to pull a demolition permit because
Mhm.
you could compromise the structure of the building.
Yep. Yeah, so that's where we're at right now. And then we were talking about doing like a hold harmless too. And we're good with that. And you know, and we spoke to the title company. So we're just waiting on I know Joel's an amazing realtor and negotiator. So he's actually negotiating for some type of credit because, you know, our buyer in this particular case is coming like 18K over appraised value.
Wow.
Mhm.
Yeah, so and then also he had to pay for an extension because we covered the first one, but and then you know, and the fees are adding up, you know what I mean? And yeah, this is his third extension.
And it's more from the seller side.
Yeah, the seller is quote unquote a little childish, is what I've heard. I haven't spoken to him or anything like that, but
Hmm.
Mine, I'm representing the seller and we already gave the buyer 15K
yeah.
in credit.
Right.
Then they want more, and they are pushing us saying, you need to close and you need to take care of the violation. I said, yeah, but we can't take care of the violation today. That is a closing day.
Yeah.
Right,
We
so
need
you
more
have to
time,
extend.
Yeah, but we don't want to
Right.
extend.
But
We
I-
don't have to.
Yeah.
But yesterday, I remember you brought this up and it was proposed to leave money in escrow towards these
Yeah.
repairs. Is
Yeah.
that like customary in lending? Lenders would allow that? And is there a time frame that they need to resolve the issues to be able to release that money in escrow towards repairs?
I know there is a way. I mean, I know it's situational based. I've done it before on an FHA deal where they had it was a duplex. It was the secondary unit. The roof was a little messed up, but they got the money in the escrow and they were able to do it. Now, on the timeline and the fixing dates, Ray, can you give us a little bit more insight to that?
On the, what do you mean the fixing dates?
Like, I know they got it fixed after closing. How were
Yeah.
we able to verify that they fixed it and stuff after closing?
Okay, so we do have the option to do an actual holdback for repairs. The only thing is, I mean, the repairs, like, we don't like to get into that. The repairs should, you know, have like some kind of a smaller value. It shouldn't be stuff with respect to permits though. But I mean, if there's you know, an AC that needs to be installed or something like that, or some, you know, some kind of a plumbing issue or something like that was to clear something, we've done like a $2,000 holdback or a $3,000 holdback. Those are, you know, few and far between because we don't like to approve those only because then we're left holding the bag. But basically we send, it's held in escrow. We send, or the title company would send somebody out there to take pictures and make sure, like some kind of inspector, to make sure that everything was done. And then, they submit it to us and we release the funds.
Hmm.
But if it's something like 10, 15, 20,000, that's never gonna get approved.
To do a holdback of that sort, okay.
Yeah.
I
And it
had
usually
one that-
should, it should be something that's gonna get fixed within like 2-3 weeks. It's not gonna, like we can't be holding that holdback for 6 months to a year for a permitting issue or anything like that. That's generally why we say no to those.
Makes sense. Yeah. Yeah, on my thing, it was like a $1,200 thing and he got it done within a couple weeks. So,
No, it's not bad.
Okay, so we need to help Iala find a solution here. Maybe Iala, after the meeting, can discuss what's going on this particular deal to get it resolved. And that's the beauty of having an in-house lender that is versed and experienced, giving us ideas, creative ways that we can go ahead and get this resolved and get the deal closed at the end of the day.
absolutely.
Yeah, on something like that, like we've had actually a couple of instances where there were permit issues. The only thing is that they weren't at the point where they're violations. So we were able to do the hold harmless at closing, and then the seller and buyer agreed on a contractor to get it fixed, and the seller paid that contractor directly because we got to keep it outside of the closing disclosure. And so then it wasn't anywhere in the closing disclosure. They agreed, the seller did pay that guy or that contractor. They agreed to do the hold harmless, and then we were able to close.
Right. Okay, before our time is up, I have another
Time
question.
is almost up.
Okay. After a file closes, do banks across the board, lenders across the board, do a quality control check on the file? Or is it that you're picked arbitrarily?
So we do one every file before, for sure. So that's why sometimes we'll clear out conditions and then it goes to our third party QC company that looks at everything. So before that's done. Now afterwards, see, we sell the loan off. So within 7 to 10 days, that loan is sold to one of my investor banks. And they do their own little due diligence, thing while they're purchasing that file. And I would say that's pretty much every file. And then within 12 months, they have an obligation to audit at least 10% of their files. And then Fannie Mae and Freddie Mac and FHA all do their own little audits too. So I would say at least 20% of the files get touched within 12 months after closing, which is still, it's a pretty decent number. So we've gotten some callbacks and hey, you forgot this, you forgot that, and whatnot. So
Okay, so that means we need to inform our buyers, do not go to El Dorado Furniture and spend $20,000 2 days.
well not
after
before closing. Yeah.
Not
So
before.
after
Okay.
Once you close, we don't do a credit refresh. We're not going to look at like your balances 5 days later or anything like that. It won't matter. It's as
Oh,
of the day of
good.
signing.
I learned something new. I was always told that they could do it a week later, 2 weeks later, and if now you bought a boat or bought furniture, so on and so forth, it could be a problem.
So I had a callback recently where so 12 months ago we did a closing. The buyer purchased a vehicle earlier in the month of the closing. So let's say we closed on the 20 something, he purchased the car on the 5th and he didn't disclose it to us. So then they audited that file and they found out that he did that purchase and he didn't disclose it. So then his debt to income ratios would have been too high and he would have not qualified. But it's as of the day of closing. So after closing, he can buy a car, he can buy furniture, he can do whatever he wants.
Okay. Well, great. I love these little sessions. I spend the month
Mhm.
accumulating questions
Wow, these are great
Because-
questions too.
because every loan out there. Every client is a different scenario, and that's what I love about you guys at First Origin Mortgage Lenders. You're answering calls, sending texts, even on the weekends, and in between happy hours. No, I'm just kidding.
Bueno, we're gonna be with you on Saturday también.
Yes, we have a commercial customer that we're meeting Saturday, November 11th, I think it is.
Oh, is it November?
And,
Oh, I thought it was this Saturday coming up.
No, it's not this Saturday, it's the following Saturday. Forgot to inform you because the sellers went out of town again. So we're
Okay.
meeting at the property and everybody's gonna be there. Okay, the seller, the buyer, the realtors, and the lender.
Yep.
And we're not gonna leave that building without a signed contract and moving forward,
There you
okay?
go.
Yeah.
So we have more time to do the comparable studies, okay? Very well. Well, it's been great. These questions, we look forward to doing them every single month, the last Wednesday pretty much of the month. And we did it now because next week, guess what? It's Halloween.
Ooh, spooky.
So we're gonna have
And-
our
and-
Halloween party.
And our office grand opening on Friday. Don't forget.
Yes,
for
it was
everybody.
rescheduled because of the hurricane, so please join us this Friday, starting at what? What's it?
5 p.m.
At
Mhm.
5 p.m. You're gonna do the grand opening of your new office,
Yeah.
which I've heard is phenomenal for First Origin Mortgage Lenders. So if you're interested in attending this Thursday, October 25th, starting at 5:30.
Yep.
Thank you so much, and I look forward to seeing everybody next time around and Ask the Lender. Ciao, ciao.
Thank you, Ray.
You're welcome.